Hello, hello, hello. Happy Friday, everyone. Anybody else so glad it's Friday? Especially after reading, uh, going through Goolsby's stuff. Oh my gosh. Oh, it's painful. Oh, good morning, John. Happy Friday. Good morning. Happy Pullback Friday. It's Pullback Friday. Which did the market drop? Actually, did it pull back? Wow. What's this coming to? Good morning, Jacob. Good morning, Patrick. Good morning, Sterling. I hope you are continuing to feel better and the pain continues to subside. Please give us a little update if you want. Uh, yes, we had Baba coming in, was a misbeat, beating on the more important thing, the revenue. But yeah, that chart's been interesting. Uh, Traders par bets on 2025 rate cuts. They also par bets on the December rate cuts, especially after Powell was a little hawkish yesterday. Not incredibly hawkish. I have to give him a little hawkish. Then we've had Goolsby. I love this. This was the one I was gonna comment on. Where is it? I gotta look for the clowns. There it is. Bring on the clown show. The Fed, that's what I was going to comment on. And Sterling, thank you for putting clowns around it. You read my mind. The Fed has to figure out why the 10 years rising and keep an eye on long rates. Uh, Maybe it's because inflation is not going away and inflation expectations are sticky. Okay. And you prematurely cut, especially with the 50 basis point cut. Let's just start with that. Maybe you should get your head out of your butt and start looking at stuff. These people are all over the place. All over the place. Well, I'm glad you're not going to move inflation goalposts, but inflation goal, your 2% is still not in target. Oh, why? They don't even know. It's going to take 12 to 18 months, Pat, to get to the neutral rate. They already said they don't know what the neutral rate is. They think policy is still restrictive, but they don't know what the neutral rate is. So how can you give a time frame to get to something you don't know what it is? Wish there were clowns around that one too. Really, how? Again, they just pick and we're data dependent. Means we're dependent on what data we want to look at and to justify what we're already going to do. And we're going to sometimes pay attention to more unemployment, sometimes pay attention to more inflation. Who the frig knows what they're going to do? All right. So it's a Friday. I'm glad it's a Friday. Did I say that already? Did I say that it's a Friday? Hey, Ro, how you doing? How you doing? It's good. Yes, it is good to see Sterling back. We had retail sales. Actual point. That's the core retail sales because the headline retail sales over here. Headline retail sales coming in better. The core retail sales not so much. So thank you for putting that. I wish they had core retail sales up here, but they don't. Unless I'm retail sales X autos. That's the core. There it is. It's just called different. So coming in at 0.1. So it was mixed retail sales, but they're still hanging in there. They're not negative yet. Hello, Charles. Good morning, Ted. Good morning, Royal Palms. So, do we have a... Oh, no, we got a bunch of people in the background who've not chimed in yet. All right. Hope everyone, I'm going to say it right now, hope everyone has a wonderful weekend in the fall weekend. So, did anybody look at the New York Empire State Manufacturing Index? So these numbers are all over the place. What is up with numbers just being like weird? And I'm talking a lot of different things. Like, look at this. Forecast -5, consensus is -0.7. Prior was -1190. Fine, they're forecasting a bounce. And this coming in at 3120, which is major expansion territory. So we've gone from significant contraction to major expansion in 1 month. What? I literally don't get numbers anymore. And seasonal adjustments are off the rails. What were the seasons? Does anybody have what the seasonal adjustments were for the retail sales? Anybody have it? Because I haven't had a chance to look at that. Hey, OD Green, happy Friday to you. Happy Friday. Thank you for popping in and saying something in the chat. What else do we have today? All right, 9:15 Eastern. So just in a 6 minutes or so, we got industrial production capacity utilization, manufacturing production. So we'll have to see how that plays out. Then we got business inventories 30 minutes after the cash opened, retail inventories, and then just your rig counts to close it down. But luckily this weekend, in case anybody was looking for something to do, in case you didn't want to watch football, you don't want to watch anything else worth actually watching, you could listen to Colin's speech. You know, what better thing to do on a Saturday at 11:55 a.m. Eastern time? What better? And then you can start off bright and early on Monday with Goolsby speaking again. Oh, I'm in a Palin. Jeez, what is that? What is their PDE ratio now on this thing? This thing has gone nuts, and it either has to go like an Nvidia style growth, or that's going to end up in tears too. But your chips, your mega caps, besides Tesla, pulling back. Pretty red market this morning. We're still, let me just, a little bounce in basic materials. Looking for possibly a minor bounce in gold after yesterday's price action. Then another rollover play in gold. Well, look at this. Technology down 92 basis points. Healthcare, comm services. The only thing positive are basic materials and real estate. Why is real estate so positive? Don't know. Fed watch is dropping back to 58% now, down from it was up around 80, wasn't it? 58. I think this is still going to drop further. And so we could get into a December pause, and what's his name? Powell sort of hinted at that. Good morning, Richard. What else do we have here? I think the EU is in worse shape than the USA right now. UK reported 0.1% growth. The Q3 was negative in September. The EU is in worse shape. I completely agree with you. So, yeah, the UK government has chosen not to tax the citizens regarding their businesses. This is the thing. It's like things get passed on to the consumer anyways. People don't realize that. Oh, we're just going to tax the businesses. What do you think the businesses do? It's not like they're, oh, guess what? We're going to eat it all. Gee, that's why everything's a clown show. Why all right, the amount of votes actually was funny because the amount of votes for her opponent was way more than the amount of votes for Kamala. Now, don't read too much into that. And then a lot of it was, I'm going to tell you why I think she lost. I think there was some little additional voting going on in that race. I don't know if it would have if that would disappeared, if it would have tipped it the other way. But there were a couple things why I believe she was not going to win. A, because of Hispanic vote and the opponent was Hispanic, and the abortion thing. They overcame anything of her, of everything else she does. And they do not want her in power anywhere close to Arizona because she will tear stuff apart. There's still so much fraudulent stuff in here with the electorate. It's ridiculous. But that's on a side note. Schiller, look, the market's cheap. It's below 38. Buy everything. I'm surprised it's red. Just buy everything. Schiller's below 38. We already covered, thanks to Sterling, we already covered Alibaba, and that's it. That's it. So, done and dusted. Does anybody know where that saying came from? Done and dusted. So we started to pull back yesterday. I was watching this channel, and now we broke below. We broke below yesterday's close. For the flip side, that was a little trailing area. Now I'm watching for this pullback into this 15. We're right in the rotation zone, which is all about 5,900. So I'm going to be watching going into next week with cycles at the bottom. This is exactly what I'm watching for. I'm watching for some kind of short-term bottoming for forming early next week, and then the secondary bounce, the bounce back up is going to tell us a lot. That's really going to tell us a lot. Are we close to doing any major technical damage? No. We're interesting enough, we're now trading below Trump winning Wednesday, but still above the key support. So again, my key support area is right around this 59.10 to 59.30 where we're trading now. I mean, we're trading 59.41, but where we dipped to earlier. What I'm going to be looking into the open, because we're rolling back down, I'm going to see if we form a little mini double bottom here. If we start breaking through the European lows, then that's where I'm looking closer to the 59.10 area for support. Any bounce this morning, unless we form a double, then I'll use the double targets, but any bounce, the key area to me would be about 59.65. What else? All right, here's the update. Pain is still intense, and will be until they remove the drain. Hopefully they can remove it next week. I hope so too, Sterling. Sorry, the pain is still intense. What are you doing back at work then? Not a criticism, just one. You gotta heal, buddy. I know I overdo things too. So, NASDAQ. We were watching this key channel. We broke below yesterday and followed through. So I was seeing if it was going to just be a channel pullback and a turn up, but no, Powell sort of squashed the markets a little. Now we're coming back into a very key, the first very key breakout area. You can see right here on that 4 hour, 20,780 area. If we don't form any decent pattern, we do have a little mini double on the NASDAQ. The NASDAQ's already formed a mini double, but the trigger point would be a 1 hour close above 20,835, 20,836 roughly, for a bounce play only. Okay, and it is in the rotation zone. The next key area to watch for if we do not trigger that double and continue to pull back is about 20,700 today. What is that? I don't know what those are, sir. What are those? Huh. I can't figure out what those are. Maybe we should all just chip in and buy a island. And we could do the morning sessions in person. We could all gather around, you know. I could bring my green tea in, and we can all have an early morning, or what I don't. I'm assuming I don't know where the island would be, but we could have the pre-market session, you know, in person. Then that might be a plan. Buy the island. Let's just. Dow is still pulling back, coming into the key support area at 43.5. Again, the only thing I'm watching from the bullish side is we make some double bottom patterns or something else. Russell, finally the Russell, getting the pullback. We'll be watching this. I'm hoping the Russell actually closes with a percent B buy setup, because then I'll be watching going into Monday, today's high. Sunday night, Monday, I'll be watching for that, because that'll be very key for the Russell with the secondary reaction. So, and the markets are looking, oh, is that money? It doesn't look like money. Is this going to turn into a Zoom call? Not if we're in person. VIX, not much to talk about. The DAX still bounced back yesterday, followed through percent B buy and holding in there. So very key today. You see the high from Wednesday and the low today. That's your very key area I'd be watching in the short term, about 19,180. The notes trying to roll over again, I guess, after Goolsby speaking. On the shorter time frame, we're getting into a staggered multi-bottom here, so it really needs that daily close, which I don't see happening before it gets invalidated, but it is still in place. We could check the yields. Yields, after a little pullback yesterday, trying to climb and break out. This could be a new high close. the high close in the yield since back in July 1st. But we still also have the double in place. So the next key on the continuous contract, the next key area is 4.59. If you're just trading the micro, the individual contract, I think it was the November, the target was 4.5, but December is going to be closer to 4.6. Dollar taking a nice little pause, coming back to test for support and turning back up. So this is just catching. Keep an eye on this 4-hour rotation zone, because if we turn back down and close below 106 again, we close back below 106, I'll start watching for either the more substantial sideways correction or possibly a slightly bigger pullback correction. Other than that, the very key areas is 106.91 to 107 for major resistance. It's almost like a self-fulfilling prophecy. I think it wants to tap that out and then go into a correction mode. Crude. I talked yesterday. This was a great example. This was a percent B buy. If you front ran it, that's what I said. You came up to rotation zone, and then you could, from my perspective, could not carry it forward because it closed below that. So as I said yesterday, remaining for me would be at break even, which would be the high. It closed below that, so you're out. You're out actually when you trade it back below, because I wouldn't risk it after a run up like that and then a turn back down. And then today forming a little mini double. So now the only thing that gets it possibly slightly for a slight bounce play, it needs at least a 4-hour close above 69.39. Other than that, if we do break this key support level, watch out below. Gold, we do have a potential percent B buy on a follow-through close above yesterday's high. With cycles at the bottom back to oversold, and that would be for a bounce play only. Your key resistance is now 26.18. And then I'd be watching for next rollover play there. You also have a little bounce in silver. Silver is already above yesterday's high, so watch to see how that closes above yesterday's high. Again, bounce play only because you're against the rotation zone. Copper, also trying a little bounce play here. Broke above yesterday's high, but we're going to have to see if it can sustain a close, but it's already run up close to that rotation zone. Again, these are not anything long-term bottoms. They can't even follow through, so I'm watching for more weakness. The yen strengthening just a bit, but no intervention yet, at least not with a candle like that. The key support coming in now at 154.60. Still, we have the magnet price of 159. Euro was trying to put in a broke above yesterday's high for a bit, but back below it. So nothing there. Going to be keeping an eye on this little flagging pattern to see if this holds or if we roll over and retest the lows. That's the only thing I'm watching, but there's no, and a buy pattern would still be a bounce only. And as we talked about yesterday, we're against very major support. If we do break the support, I'm expecting a return to this 101, 102 area pretty quickly. PTP Island sounds like a potential reality show. Oh boy. It's not going to be like Survivor, is it? I don't want to go on the island then. If we don't have good food, and you know what? Forget it. You know what? There's no way I'm as PTP Survivor Island. That is not happening. That would not be happening. Bitcoin, so far on the bigger picture, a sideways correction. Not much else to talk about there. Spiders finally pulling back if we sell continue soft today, we've come to the gap open price and found some support. If we break below today's, if we really break down below yesterday's lows, which we're looking right now pre-market to go substantially down there, the key area is 591.04, which we're below right now. So the next key area would be roughly 589.20 would be the magnet price for me in the open. And the bottom of the rotation zone on the daily is coming in at 586.50. So anywhere in here, I'm watching support going into next week. We just need good internet. I agree. We need good internet. Well, it's going to be tough to do our show without good internet, isn't it? How are we going to get the quotes? How are we going to get timely quotes? Q's gapping down 503.15. That is below this close, so the gap's being filled by another gap, and the next key price for me is right at the open of Wednesday and the bottom of the daily rotation zone, which is 556. Tesla pulling back to rotation zone, so I'm going to be watching also next week going in for a buy setup, a short-term bounce setup in Tesla. Nvidia is still sideways correction. This has become just a disaster of a mess, so we're not using that potential double anymore. If it does break down, the only gap price I'll be watching is to a fill back to Tuesday, the 5th of November at 139.91. What else? We had Applied Materials yesterday, which had earnings, which was a beat, but not to the market's liking. Not to its liking. And look at this. It's going to gap down below key support. Below key support for Applied Materials. So that's also why your chips are somewhat red today. Besides Palantir. Next week, there's basically no news. What can this do for the market? Well, it just means we don't have that input. By the way, let me finish Applied Material. Key target price is 163.35. That's not only that was a very key breakout zone you see here. Let me zoom in. See how it came up here, resisted back in January, broke above it and retest, catching with the rotation zone 2, and then it was off to the races. And Applied Material tends to do this really, really well. It's a very technical trading stock. Because you can see, so I would really focus on these harmonic and prior key areas. You see how it ran up here? Multi-topped, broke out above the multi-top, came back, retested, and then off to the races. Off to the races there. Okay. And then here, you see how this prior support, breaking below it, tested resistance, tested resistance, tested resistance, tested resistance. Then you had the key support area. Now it's broken below that right here. So this, if you want to study a really good technical trading stock, way it really upholds the price action. So at any bounce, your resistance is now 174.50 to about 175. So I'd be watching on any bounce for that to roll over, and the next key support area is 164, 163.35 to 164. What we're going to get a secondary bounce probably next week, and you're bringing up news next week, the economic calendar. Well, we got Fed speak, and then it's very quiet. It's very quiet. You got just your jobless claims in Philly Fed on Thursday, and you got some more Fed speak. And then Friday, consumer sentiment. So you don't have much until Thursday, Friday next week. So with this, could we easily get the secondary bounce play? When I'm talking about the secondary bounce play, because this is what I love. This is now the primary reaction. Once we get some low, whether we get a buy setup or whatever it is, with cycles getting the bottom, I'm going to be watching for this. Whatever the low turns out to be, you know my magic levels I'm going to be watching. So it's going to have to get adjusted, but at this point, I'm going to be watching for that bounce, and then it's got, at this point, we'll just call it 6,000. It's got to bounce and sustain a daily close back above 6,000. Otherwise, if we get to close back above 6,000, then we could easily retest the high area and put in a potential double or continue higher. If it can't get to that 6,000 and rolls over again, then it's starting to even act weaker than putting in a potential double top. And I'll be watching this key still broadening wedge, because it broke below the wedge program before, but then it snapped back up with election results. So I'm still watching that. And if we start breaking below that, I'll be watching that we could fizzle out with the Santa Claus rally, and we could easily get back to this key 200 area. Is there a very long-term potential weekly double bottom in Disney? These results. Yeah, there is. It's probably even better showing up on the monthly. You can see it. Look at that on the monthly. Even though this makes it a bit sloppy, but you know, anything, it's really got some heavy lifting to do. Okay. I'd actually be surprised if this triggers. Because these results, as I went over, the revenue's down. And they're saying pricing versus revenue's down, and the earnings were worse than the last report. The earnings were worse. They just happened to beat on dumbed down earnings and revenue. The revenue's lower. So you look, the revenue was 23.15. This coming in at 22.5. Yeah, beat, but it's you're declining revenue. I think this is insane. But that's the market we're in. It doesn't matter. It beat. Let's just buy it. As long as it wasn't Applied Materials, which beat, and it's not buy it. But this valuations just have gone out the window completely. So, is that the little Disney mouse, Charles? Yeah. So yes, that is it's sloppy because of this price action. But I'd still watch it. That's one I would not chase higher though. I'd be waiting for it to really prove key support. This is just this price action based off this, and I would not chase anything higher in the short term with Disney. Yeah, and they're already, what's that live version of Snow White? Boy, with all the calls now for Disney to get rid of, cut ties with, I forget the actress's name, based off her election comments. But there you got a huge boycott already brewing to not see the new Snow White. So we'll see. Why can't people just keep their mouth shut about stuff? Especially, why? You're not going to help your career. I don't care if you don't like Trump. I don't care if it's the same thing. Just stop for both sides. All right. Let's see. Let's take a look now. All right. So we are in potential little mini double bottom territory. Does not mean it has to trigger. Does not mean it has to trigger. But that would be it's just a little mini bounce play anyways. And that'll probably be off the table by Monday. So I'm going to be watching to see what happens. If we do break below this 59.30, the next key area I'll be watching is this 59.10, 59.11 area for very significant support. Clean up this chart. Yeah. Yep. Took a while. That's what I'm talking about. See how long it took for that double to play out? What's your next key area on KRE? It would be 73 area. Off the regionals with the rising rotation zone. Take a look at coin. If it closes above there on the weekly, yeah, but I do not want a downward close. I do not want a red candle close. I tested that out specifically. You want a green candle close. You don't want it. So if this bounces back, you want a green candle close on the weekly. Your little mini double top played out. Back to key support. So it might not close above there on the weekly basis with our green candle. So that's what I need on the longer term for it to shift the longer term probabilities. And it already ticked off that 75 and found major resistance there. I'd still be watching for next rotation back up in coin because Bitcoin hasn't topped yet. It's a little long, Richard. I'd still just be using the cup and handle those next retracement levels. All right, with that, I've got to run. Hope everyone has a wonderful, wonderful day. See, this is why you wait for things to trigger, because the potential double in the NAS no longer on the table. Breaking down. Breaking down. The next key area, since it did break now below very key support, the next area I'd watch is this 20,630. 20,630. Coming in right at the 50% harmonic in these little two support shelves. And the S&P has not broken key support yet. You're welcome, Sterling. But I'd still be watching for the secondary bounce, but then it's got to prove itself above that minor on the pullback 62.5%. We can take a look to see if it bounces next week. But what's the market going to do? I mean, it's not going up today. People should be in panic mode. All right, with that, have a wonderful weekend. I'll talk to everyone next week. Bye for now.